Good evening, everybody. Welcome to today's Contenders live stream. Here it's a really like autumny night, so I would say have your tea ready, have your coffee ready, have your notebook ready, and make some notes because I think this stream is going to be really good. I think so. So welcome everybody to Contenders live stream number 70 already. Damn, that's been a long time. First of all, I want to show you guys the disclaimer because ultimately all the content that we give here in these streams are for educational purposes and by no means financial advice. All the trades that you take are for your own responsibility and the consequences of that as well, whether that may be a win or a loss. So having that out of the way, I want to move quickly on to today's content because, not gonna lie, I'm pretty excited for today because what I will be covering today is the Pitchfork. There have been some questions coming in over time of how do you use pitchforks and what are they being used for. So I thought it might be a good idea to elaborate on that today and also provide you with some strategies how you can use to trade from, and ultimately to provide you yet another technical tool to add to your trading arsenal. Then I want to move on to basically do some live charting from scratch. And I've chosen to do this is like the new chart of the new chart of the week. And so basically what I'm gonna do is probably today I'll be sticking to high term time frame analysis, as the tool of today is best used for high term time frame analysis. So to keep that all in line with each other, and of course depending on how much time, how far we progress within the time of today's stream. Gonna basically going to chart XRP tonight from scratch, and then you have the opportunity to basically get into my mind and how do I start a chart and how do I work my way through the chart. And then obviously also plenty of space to ask some questions should anything be unclear. And we'll spend some time on answering some of those. So let's begin. Pitchforks. Let me quickly check if my screen is being recorded correctly, as Bitcoin is actually dumping right now. So gonna have to stay focused on today's content. And because that is what ultimately the Contender stream are mainly for. They're mainly for adding some theoretical knowledge. So pitchforks are on the menu for today. And first of all, I would like to start off with saying that the pitchfork is an absolutely great tool to use on basically on high term time frames, such as the 4 hours or the daily charts. However, they can be used on all time frames. So you can use them also on a 50-minute time frame or on a 5-minute time or even on a 1-minute term time frame. Personally, I only use them when doing basically macro analysis. So I would usually, when I refer to pitchforks, you will rarely see me using them on lower term time frames. I'm aware that in this stream there are some examples on lower term time frames, but those are definitely exceptions. For me personally, I find that they work really well with other high-term macro analysis tools. So having that said, let's just immediately dive straight into it. Pitchforks are technical tools. You can use them on TradingView and other trading software. And the way that you construct them, you need 3 pivots essentially. Ideally, the third pivot corresponds with a CC channel, for the confluence, so to speak. So let's look at an example. I have plenty of examples for you guys today, and this is not an overly complicated tool, but I do think that some additional information on how to construct them and how can you actually use that to trade from is very important. And then I also want to move on to, okay, how do you apply that then in practice by doing some live charting, by using tools such as the Pitchforks. So first of all, here you see that one of the points is corresponding with a golden pocket, or the superior version of it, the champions channel, how we call it. As you can see here on this image, basically you might already see it, that the pitchfork is being constructed by 3 pivots. Ideally, the third pivot point corresponds with the CC. So moving on to the next example, or the same example but then explained a little bit more in depth. The first pivot you would basically construct the pitchfork from is to select a significant low, then you would select a high and then a low, and this happened to be right in the middle of a CC. Now once you've identified and constructed a pitchfork, the way that you would trade it actually is you would trade it from the low, and if you are very aggressive, you can enter directly on the CC, or alternatively wait for a change in market structure on a lower time frame. And as long as the low holds, essentially you have an 80% probability of hitting this medium line, which is going to be your target if trading from this pitchfork. Now, so you have an entry, you have a target, then where is the invalidation? The trade simply is invalidated when you lose this low, or in other words, when you lose the third pivot. Now, this is basically a secondary screenshot where time has progressed a little bit, and let's take a look at how the trade would have progressed. As you can see, if I go back to the previous image, you see the initial trade was taken from the initial low, but then the low actually got taken out. So that means that trade itself would have been invalidated and you would have been stopped out. The trade is now a little bit less perfect, but you can now instead adjust this third pivot point to the new low, as the trade idea on its own is not yet invalidated. Just the trade that you took previously is now invalidated, but if you adjust the pitchfork, the trade idea in general is still valid. Have to mention the trade is now a little bit less perfect as it ultimately got past the CC. But what is really important to notice is that while the first trade essentially has been invalidated, the idea doesn't have to necessarily be invalidated, as ultimately you can just readjust your pitchfork and then it would still have a 80% probability of hitting the median line. So that is something to keep in mind, and that can provide you with pretty nice trades, to be honest. This is a really great example of a trade that worked out absolutely perfectly. This is Link on a 4-hour time frame. And the pitchfork is essentially constructed by identifying a significant high over here, then selecting the nearest low, and then back up to the high. Price stopped out at or around the CC, which gave you a short entry, and ultimately price progressed downwards, hitting the median line target perfectly before moving out of the pitchfork line over here and preparing itself essentially for the next move. So this is a, I think, perfect example of like the ideal way of how to play a pitchfork. Now let me cover you some strategies. Like this is obviously one of the strategies, but there's a couple of strategies that you can combine and use to trade off of essentially pitchforks alone, really. So the previous example that I showed you is the most basic and simple way to trade a pitchfork, which are excellent to use on a higher term time frame. It's not overly complex and they do give you good probabilities, and especially in combination with other tools, this can be super powerful. Now, if you want to add more complexity and place more significance on this specific tool, then there are essentially a few different ways how you can trade based off of Pitchfork construction. Well, yeah. There are a total of 5 official strategies, and for today I will be covering only 3, as I think those are the ones that are, in my view, the most actionable and fit best in what you've already learned. If I would go over all of them, then you would need to understand other theories such as Elliott waves, and as we haven't covered that yet, it would not really make sense to cover that now. So if there's any interest to learn more about that later on, then I guess we'll do another stream on that, but for now I'll stick to those 3. And also, since I don't really want to overcomplicate things, as I also want to spend significant amount of time today actually charting and you know, allowing you guys to look with me. I'm also going to comment while I am charting, and I think that's also very, very valuable. So yeah, let's move on to the strategy. The first strategy is called flat price action strategy. If the price failure strategy is really, really similar to other strategies that you already probably know, but it focuses on decision making once price actually reached the median line. So once price in this example reaches the median line, there are basically 2 options for price to go. The first one is price will either break the median line and flip it into support like this, and then in which case you would probably look to long it and then trade it simply to the upper pitchfork line. The second option is price will reverse at the median line, or at times even fail to reach it, which signifies weakness. Now, when price then in turn breaks the lower line, backtest that, you would trade it short with an initial target of where the previous low has been. Now, this of course depends on the context and strength of the move. But I don't think that this is extremely different from what you already know, because it is, in a way, it is very similar to trading swing failure patterns or a break of a channel, for example. So if price in this case does not reach the median line, it can essentially be classed as a partial rise and indicates weakness. And in other words, this is a strategy that is designed to fade a directional move. So what do I mean with that? When everyone thinks here, when the majority, or like the average Joe, thinks like, oh, we're making a higher high, right? Maintaining or building up bullish market structure here. We're taking out the high. Everyone longs here, ultimately resulting in some form of a swing failure pattern like development in price. You would be looking instead to fade it, because you are trading the pitchfork from the median, and the median is ultimately your target of your initial trade. So therefore, you know, you would be looking for the median to function at least as resistance, whether that is temporary or permanently. That, you know, that, well, nothing is permanent in price action, but I hope you get my point. Let me get a drink. So that basically covers the first strategy, essentially channel trading, but then based off of a pitchfork, in short. The second strategy is called the mini median line, and this strategy is one that I'm myself actually pretty excited about, as I sort of came up with this one on my own. And as I was scrolling through some old trades that I did in the past, I found this, as I was looking for pitchfork examples, I found this example. So this is a trade that I did in January. And funny thing is that I then found out much later that this is actually an official strategy designed by the creator of the pitchfork itself. So I think this is very cool to share, and also pretty much a unique take on apparently the already existing strategy. And I would say the way that I'm probably going to explain it is optimized for Bitcoin specifically. And I think it should and would work in other markets as well, but I've simply not tested it there. So I have no statistics or experiences to back up that assumption. So feel free to experiment, and yeah, would be happy to know what are the results if you're trading other markets. In any case, the basic idea of this is to work in a fractal like way. So where you identify a larger pitchfork on like a higher term time frame, so like a big pitchfork, and then as we basically have going on here in this image, and then once the initial targets are hit, in this case the median lines, at or around the median lines, and you have to say, like, of course, pitchfork examples, like it doesn't always exactly meet the median line. It does at times, but personally I would prefer to look at it much more as like a region. And if I'm implementing this like in my other trading, in my daily trading strategy, then I would use other tools to find the confluence and to give me a heads up on where and when to enter a trade. But the pitchfork basically gives a really good guideline, and sometimes it does hit exactly to the dollar, which is amazing. But that is general also with macro analysis. I got a lot of questions, so slightly off topic, but I do think it's important to notice. I have been marking out the Bitcoin 10,500 level for, I think now 2 months or longer even, and still every day I get DMs from people in the group that ask me like, hey, how did you got this level, and where would you exactly then, for example, enter into a trade? Well, the thing is that I don't really look at these kind of high term time frame levels as an exact level. And of course, it's great if it hits exactly, and that is simply amazing. But generally, I don't wait for the exact level to be hit. So I'm most of the time just looking at it like a $100, $150 region. As price enters into that zone, that is when I'm when my inner alerts are going off, and that is when I'm starting to really focus into what is happening here at the moment, and is there a potential rejection or a reaction coming off of that. So keep that in mind when I speak about specific levels, especially on a higher term time frame. I usually mean a region, and sometimes they do hit exactly to the level, which is amazing, but it's not obligatory for it to hit the level exactly. So there was a little bit of topic, but I do think it was important to expand upon a little bit, because I get these questions a lot. So getting back to this specific trading strategy. So you identify first a high term time frame pitchfork, and once the initial targets are hit at or around the median line, you would essentially start looking for a construction point of a pitchfork of lesser degree. And in plain English, that means a smaller pitchfork within the larger one. Ideally, you would look for a CC to get your third pivot point from, as I explained in the beginning of the stream. However, in a strong trending market and in specific Bitcoin, swing failure patterns make up for excellent construction points as well, as here is the case. And then basically the same trading idea applies here in exactly the same way as that you would typically trade also the larger pitchfork, and from low to the median line, or from the high to the median line. And in this case, in this particular example, it means to construct the pitchfork of the swing failure patterns, looking for the midline where you're looking to trade essentially the initial swing failure pattern, which is here, into a higher low, looking ultimately for higher prices to follow. So that allows you to actually short in an uptrend, which is really risky, I have to admit that. But ultimately, I'm not looking for new lows to be put in, especially if the trend is strong. But I'm actually looking for this swing failure pattern to reach a higher low, ultimately maintaining the macro bullish market structure. And then, if we add Fibonacci into this, that is where the real opportunity and confluence arises. look at the great confluence, right? So first trade is basically taken here off of the low, which is also a CC, as I remember correctly. Trading it simply up to the median line, and then ultimately, as you go either sideways or you're starting to have some sort of like a consolidation or rejection of that line, you're looking for 3 new construction points for a smaller pitchfork to form. And in practice, that also means that sometimes you do have to take a loss, because it does make sense to initially first have your first pivot point over here, then here, gets invalidated, and then as you actually swing fill your pattern to high, that is where your new construction point forms, combined with a short entry, trading it up back to essentially the median line, and then ultimately, in this case, it kind of like started grinding downwards, but then ultimately it swing failures these lows again, straight in the CC, and that's when we are continuing the macro trend upwards. And then later on, the same thing actually happens once again. So you're never really reaching the median line anymore, but you do get ultimately a rejection, and then another leg up, ultimately swing furthering these highs again, giving you a new pitchfork, and then into a higher low once again, giving you a really nice trade once again, and then till invalidation or till your target is reached. That is the second strategy. The third strategy is what I would say what is called price failure. And this strategy is very, very similar, or you could call it a close cousin of the flat price action strategy, and is very, very similar. Although you trade it slightly differently, because generally the price rallies in a strong directional trend. And in this example, notice how price bounces back and forth between the median line and the bottom line of this pitchfork construction. And you can see in this example, I have to admit, it's not the most perfect example, but it does illustrate the idea very well, in my opinion. Ultimately, price fails to reach the median line, and initially, for example here, this does lead ultimately to a price reversal higher up here, so to speak. And this is also the moment where, according to this theory, it catches many traders off guard, and ultimately when the long squeeze occurs here and here, swing failuring this low initially, as you can see here, right? So it does swing failure this low initially. Apologies, here it does swing failure this low initially, but because you are trading from this pitchfork, right, you are already aware that it did lost the pitchfork right now, and it did swing failure this low. But essentially the same thing happens as when you're trading a channel. You don't necessarily want to hold it as a swing long. Of course you can enter into a long here, but ultimately you do want to see this line reclaimed. And initially this catches many traders off guard, so you do have the long squeeze going on here, so you could potentially trade the bounce, but you're already aware that this might signal the end of a trend. And then ultimately, at first it does swing failure one of the lows, it does have a bounce, but then eventually it manifests itself in a loss of market structure, and ultimately in this particular example, a macro trend reversal. And for reference, what you can see here, this was part of the run-up in January, where a few weeks later we had the Corona crash. And this actually signified the end of the trend at that time. So, very interesting. I see that I'm now about 20 minutes in the stream. So, you know what? Let's just... I think the theory is covered for now. Should you have any questions, please write them out in the chat, and I'll pay attention to them and answer them as best as I can. But with the theory covered and what you've learned now, let's just go straight over to TradingView and just expand a little bit upon that, as TradingView also has some unique features to the pitchfork that, at least as far as I'm aware of, you cannot really find anywhere else. And then we'll move on to the live charting. So let me switch up my screens. There we go. Let me see. Right. Bitcoin doing its thing. I can see that. Let's just open up a new new chart layout. Let's see. Let's see what we got over here. Got a couple of unnamed ones. Right. So let's delete everything. Cool. So first of all, what's important to know, where can you find it? So on the right, on the left, for the newer members in here that are maybe not familiar to TradingView just yet, on the left side you have your toolbox. On the third one, from the most upper one, literally the first one is the Pitchfork. If you want to work quickly with the Pitchfork, then you can add this to your favorite, and then you can see that the icon appears into your favorites bar. So that is how we'll be using it. And as you can see, this is a Pitchfork. You have Shift Pitchfork, Modified Pitchfork, Inside Pitchfork, and a Pitch Fan. 90% of the time, to be really honest, you are just going to use the normal Pitchfork. Although there are some variations, and like I already said, as far as I know, I don't really know any other trading software that actually has that. So this is kind of like an exclusive thing to TradingView. But let's see if we can select a pivot. So simply what you would do is, let me go over to a daily term time frame. Simply what you would do with the magnet tool on, you would select a high, you would select a low. So this is the low of the entire downtrend, a low, and you would go back up to the high. Now, the thing is that what you can see here, it actually looks pretty perfectly, doesn't it? Because what ultimately here happened, you had the end of the trend. The pitchfork that I just showed you in the example was drawn from here, from this to this entire uptrend. But what you can see ultimately is that upon declining, you hit the bottom of this pitchfork like almost exactly, right? Which is pretty amazing. Then price moved up, actually, had some reactions, like big reactions actually. That's like, what is it, 10% or something? Yeah, 14% reaction off of the median line, ultimately flipping that low term time frame support, and then continuing upwards, right? And this is another way that you can trade the pitchfork. So ultimately you would want to enter with other tools, right? So probably you would not enter after such a big black swan event. You would probably not enter a trade off of the pitchfork, although you can. But the way that you would trade it was probably with other technical tools like weekly, CCs, etc. Imagine you got into a long here, and then this would simply be your target. Close out of the trade, look for a new opportunity, and this refers to high-term time frame trading mainly. So when you do get like its initial rejection, you can apply one of the strategies that I just explained, or let me adjust that, make it a little bit more perfect, or you can wait till this midline is actually being flipped into support, a lower term time frame, because this is on a daily term time frame. And then if that is actually being reclaimed with strength, then you would simply look for the upper part of the pitchfork line to be reclaimed or to be broken, or at least heavy take profit target. And as you can see, first on a lower term time frame, it did got like a back test here with this wick. Then we had a rise up, and then we had a massive drop, and almost a perfect back test. And that is when you fully like leave the pitchfork ideas, this particular one, and then have to use other pitchforks, pitchfork pools, so to speak. I'm struggling a little bit with pronouncing the word pitchfork somehow. It's not really that difficult of a word, but right. So imagine you are constructing this pitchfork, and let's say price is already more or less like moving out of this, or you're like really late to the move, for example. What you can do then here specifically with TradingView is you can I have made templates, but you can also click here on the settings button, and then style, you can change that. You can change it to shift. And what does it do? The thing is that the theory behind is not necessarily important, because what you want to know is how do these lines hold up and how well are these lines being respected, right? So I would say this is not really like an exact science. It is more figuring out and see what works. And this specifically works, let's say you've identified on such a macro term time frame, you've identified this pitchfork, and let's imagine that this this bottom line originally has not been that well respected. What you can do then is try out these different styles of pitchfork. So you can do actually quite a lot with the same pitchfork, and that allows you to basically recycle or reuse an already existing pitchfork. And as you can see, I've now selected the inside pitchfork, and you can see that this is pretty amazing how well this has been respected. So after you've maybe missed the move and you're thinking like, wow, this is a really nice pitchfork, altering some of these styles can also provide you with really nice support and resistance lines. So one thing to also consider, let's imagine that you did not have this, for example. Then you could have simply, and of course this is just hypothetically, so I'm just trying to show how you could potentially use this. So let's assume that what if price just like grinded up here and then actually we had like this drop, then it would have provided you with a really nice short opportunity, doesn't it? Of course it never reached the median line off of this, but it did give you ultimately, if you're applying other tools like CCs and stuff like that, it did give you like a really nice short trade. But of course, this is all like hypothetically, but this is one of the ways that you can use the pitchfork as well. Now, how realistic is it that you're using this like this? Probably not very often, because the thing is, if you see price moving out of this pitchfork, it is probably much more likely, at least that's what I do, like 90% of the time you will find new pivots to pull from, right? So if price moves out of this pitchfork, I would probably just find new pulls, low to high to low, and then at that moment in time locally see what price is actually doing then, you know, and continuously looking for new pulls off of this pitchfork. And this is also referring a little bit to the reason why I like to use it on like much more of a macro term time frame, because of the fact that Bitcoin likes to wick here and there, or here and there, everywhere, so to speak. You don't always get like really nice pitchforks. Lower term time frames, they can help, but as you can see, they look like really like fairly cramped, and they also don't really stay very long within this pitchfork, you know. So then you would find yourself adjusting these things continuously. For example, this is actually I didn't plan this, by the way. This is this is pretty nice, but that is how you could use it. For example, I hope I'm making sense, by the way. If it's really confusing, then just let me know and I'll try to explain to the best of my abilities. But this is the way how I personally approach it. So I prefer to just pull a new, a clean, a normal, original pitchfork, and I would find myself more or less like adjusting them as new highs are being put in. You know, it gives it gives a pretty mechanical way of trading, which is really nice, actually. You have a very clear entry, you have a very clear invalidation, and then if it's invalidated, you can simply adjust the pitchfork into a larger one. And that provides you with a very mechanical and structural way of plotting out next moves. So yeah, is there anything that I forget? I don't think so. Thinking, no, I think I've covered everything about the pitchforks, what I think is relevant to know at the moment. And then I would like to do some analysis on XRP. I have never really traded XRP. Just for transparency's sake, you can see that it's not even in my list. So that is also the reason why I think XRP is pretty good to chart, because then I can I'm completely fresh, completely unbiased. I have, if I even have it charted it, then it's like at least over 1.5 years ago. So totally outdated. So I think that provides probably the most value for you all, that I'm totally unbiased and completely fresh. I'm just coming into a completely new chart. So let's begin then. So whenever I look for a new asset, what I would first do is obviously get the ticker. And thinking off of that, I'm debating, should I, once I get the chart set up, I think I'm gonna close down my camera, because then you can see the screen a little bit better. But anyway, first off, I would go for the Binance chart, and I would simply just want to see how much data is on there. So this goes back to 2017. Let's see if we can get more data. The more data, the better. Oh, this is USD, not interested in that. XRP BTC, Poloniex. Okay, so this goes all the way back to 2015. Let's see if we have something else. Bitstamp is also usually having quite a lot of data. Huh. To March 2017. Okay. What else do we got? BTC. Nah, not Coinbase. Bitfinex. Okay, so it does look like Poloniex. Don't know how to fully pronounce that, but anyway, this one has the most data. Okay, so next thing I'm concerned about is how much volume and how much wicks does this chart have. So I would start off by simply going on like a really high term time frame, like a weekly, and just see if it kind of like corresponds with the rest of the charts. And that way I know, yeah, there you go. So, right, so this wick on Bitstamp, that is like the only thing that you have here on Bitstamp. So that is important to be at least aware of. For the rest, they all look really, really similar. So the thing is that if you do have like on an exchange that is like really has like liquidity problems, you might get like different fit pools, different analysis things on that specific chart. So that is the reason why I just want to quickly compare that to each other. And since Poloniex has the most data, I'm just not really interested in the other ones. Let's just move this up for a second so I can just find it easily. And yeah, let's begin. First thing ever, what I would do is just simply look at macro market structure. So let's do that together, right? From the beginning of the chart, we had here this low. We had this low. We had a high. We had a low. Basically forming the first three important things of what you need for market structure. 1, 2, 3. Then we made a higher high. Then we made a higher low, actually. And this is globally, right? So I'm not really interested in these kind of things. So this is obvious that this was pretty much like, you could consider this as a bear market, but I'm not so interested in that. What I'm interested in the big things. It's a weird chart, to be honest. Low, high, low, high, higher low, lower high, higher low. Okay, so it's not too helpful, isn't it? So I don't find this too helpful. It's just a little bit weird. So what I'm gonna, at least not necessarily weird, just how it is, but this just doesn't give me any idea of what I should look for next. So what I'm gonna do is I'm gonna narrow down now a little bit, basically identifying a little bit more local market structure. So here you had a high, low, lower high, lower 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 low, lower high, and it basically leaves us in the middle of a macro downtrend. So that's the first thing. It's, you know, the first thing that I notice here is we are, at least XRP is in a downtrending market, period. That's a global market structure. Now, how does that look like on a more local term time frame? Where's our last significant low? Crazy wick. That was in June. Okay. So where does that? Yeah, this wick is also not really that helpful. Nevertheless, doesn't matter. I'm going to consider this the low. So what do we have here locally, right? So let's delete this. We are aware that globally the market structure is downtrending, so not bullish. So is there any light at the end of the tunnel? That's what I want to know next. Locally, this is the current low, the lowest low. So how did we build from here? Low, high, higher low, higher high, bullish market structure. Lower high, ranging. Okay, that is interesting, to me at least. So that actually says that locally, since we've put in this low, we have not taken out any of these lows again. So as it currently stands, I would say we are in bullish market structure. Until where does market structure turn bearish again? I would say lose this low, and that is where I would totally not be interested in longs anymore. This is just purely market structure. So that is how I firstly would begin. You know, does it have potential? Is it in an uptrending market? I prefer to trade altcoins long. I don't short it. No reason, just not interested in it. So where do we go from there? I'm interested how do fit pools react on each other. So that is the next thing that I would quickly want to check out. So back to the daily. And we had this market structure, right? So how did XRP react in the past? Let's just pull some fibs. Let's add them all on. And we can see here from high to low, we pretty much got a reaction of 382 twice, right? So that is something that is interesting to know. Now I'm gonna, this was really nice confluence from this high to this low, almost to the CC, corresponding with the 382, which explains the reaction off of here. What else are we doing? This took out a swing failure at the high insanely last September. A pretty crazy move, by the way. All right. So how did those things react? So 96. so many wicks here. It's CC. If I do it a bit more globally, what do we got here? 236. Interesting. Those are typically FIB numbers that correspond with a very strong downtrending, with a very strong trend in either direction. So that is something to take note of. Not necessarily relevant right now, but I do want to just see what FIBs does it generally react on. So we have a CC, we have almost a CC, front run here. Right. Okay. CC. So we have a couple of CCs. It likes to front run it, and I'm aware that this is in a strong trending market, right? So I will get to the other FIB pools in a second. I'm now pulling FIBs from top to bottoms as well, just to measure what does it react on when going with the trend, which is basically 382s mainly and 236. And then what did we have over here? This is now we're arriving a bit more into recent price action. Would you look at that? From the most recent significant high, I would say, to the most significant low, we have a CC. Okay, so CC is definitely something to keep in mind. Now I'm going to do the same thing, but then from lows to highs. It's not very exact, but let me just see. Not too helpful. 6-6 again. Okay, so I see much more. You know, normally I would really write this down and really have like actual statistics. But from what I can see right now, is that price does react on CC like 1, 2, 3. At least it gave wicks and occasionally a bounce, so that is important to know. And that was in a downtrend, so something to be aware of. What do we get when we expand this? Oh, not expanding, but make negative FIBs out of that. Expansion. Right. Okay, so I come now to the conclusion that, let's say, CC 382 just basically standard FIBs. So not that much deviations, at least globally, right? So I'm still on a fairly high term time frame. Let's see if we can construct a pitchfork. Crazy. It's probably not gonna give anything. Yeah, I thought so. Oops. Yeah, I'm actually much more interested in what is happening here locally. All right. Interesting. From high to low to high. Saying that this is pretty much like just also experimenting a little bit with like identifying significant tops, and this is why when doing technical analysis I would say like this is why it's really important to be able to recognize market structure, because that really helps you in identifying pools, which is great. It looks like this this pitchfork is rather interesting. Wow, there you go. That would have been quite an amazing trade. So let me hide this for a second. This is a perfect example, isn't it? So, and this could have been more or less an entry, trading it back down to the middle. That would have been here, giving you 21%. Pretty amazing. If you're shorting. So it's actually quite well respected. We have now basically moved out of this range, or moved out of this pitchfork, and then I already cheated a little bit because oops, oh yeah, there was a different pool. I modified slightly, then the midline is also fairly well respected, and the top line as well. So that is something to keep in mind. What if I do this? Yeah. Okay, so this is actually yeah, another trade actually. CC, top of this modified pitchfork, actually pretty cool. Invalidation, I would say above this high, I would say, and then you would be still in the trade essentially. That's what you would be in. Now let's see if we can get some confluence in here. Okay, we're now below the CC. Right. So that's pitchfork magic, and we haven't really done even like horizontals. So just only pitchfork work. So let's move on to my normal routine quickly. But I just wanted to show you guys how you can be creative with constructing pitchforks and using the alternative way. So I hope this is insightful. I hope more than anything, I hope this inspires you to also start experimenting with it. But now let's move on to a little bit more standard TA. So I have identified a monthly, which is really far away, but nonetheless it is a monthly. Actually, let me move that down here. Monthly level, another monthly level, and another monthly level, and I would say probably this one is a bit more relevant. There we go. Weekly. Weeklies are pretty much the same as the monthly, so they're pretty close to each other, and I prefer a higher term time frame horizontals. I would say this one is also relevant. This price is literally hovering around there right now, so that is something to take note of. Maybe we can get a daily out of it as well. Yeah, so this weekly definitely relevant. Ideally, typically what I usually do is I have only like weeklies or like horizontals when there's no close through it yet. In this case there is a close through, but look at the respect. So here you identified the weekly resistance, smashed through pretty much. where did it top out exactly? More or less at around the monthly. Then we had kind of like a range between monthly and weekly, grinding through it, and now back at the weekly. So actually did have a reaction off of it, and this is still on a daily term time frame. So let me see how well that is actually respected on a lower term time frame. Fairly well, with some wicks through it and everything. Like not really perfect, but it works. It works. It's not that clean, to be honest, but definitely works. All right, so those are my horizontals. Maybe I miss one, but I don't know. Right, so then we have we've covered market structure, and locally I would say it's bullish until yeah, really this monthly is being lost ultimately. Actually a little bit earlier, really, but yeah, line in the sand this monthly, I would say. Cool. Then next I would look for channels. So I'm gonna hide this. I'm going to see if this channels nicely, and looks like it does. So we have this channel. Let me see if we can add a little bit more complexity with that by giving it a fib channel. Standards. I'm looking for the speed fan. Am I blind? Oh, there we go. Ooh. From high to low. Not gonna lie, this is new for me to chart and comment at the same time, so it is not that easy. But I like this channel at the moment. 618 seems to be fairly well respected, right? The thing is, with a new chart, I can spend like a whole day on doing analysis like this. But one thing that I do want to know, similar as to Bitcoin, and that also I think relates heavily to the question that I get a lot on Bitcoin. Where did you got this 10,500 level from? Well, very simply, I go to the entire chart, I pull a fixed range from beginning to end of the chart, and that's where what gives me my point of control. Now this point of control is all the way down here, but I do see like some high volume nodes over here, so that indicates that a lot of volume has been taking place over there. So I can also now play around a little bit with my pool, and funnily enough, this point of control was, wow, didn't notice that yet, exact touch. And then we had which is crazy, we had a rise of, oh my god, 2000%. Like this is now you guys experience me when I'm literally charting something entirely new, being amazed all the time by technicals. And more locally, I would say before that crazy 2000% rise, we are now at or around the point of control. Or at least it's now definitely resistance. So that is something that I want to now map out. where do we have resistance, which is over here. Whoops. I would say key level and say global POC, at least more or less global. Then let's narrow it down even further. Let's see what we got ever since we had this flip. Very similar. Very similar. So that basically leaves me to conclude that most of the volume has been built up in this range, which actually leads me to believe, and I'm remaining here on a little bit of a macro term time frame, right? So let's take a quick look at volume. Which you could see there's also not that much to be taking off. This is weekly volume. Bull volume is dominant in here, so that might indicate very. The thing is, okay, so what I'm seeing here is I do think that globally we're still like in a massive downtrend on XRP. So ideally, what I would like to look for right now, like more locally, I would say there's definitely potential for a trade, but like more globally, and I'm thinking more like this as like a longer term swing trade or perspective on XRP. Very simple. We just need to, you know, this is the high that essentially needs to be reclaimed. To reclaim that, and then I foresee then we can actually rise up further. But until then, there's like we have the global point of control. We have like this probably a lot of subdivisions within these levels. We have horizontals to reclaim, and as long as that doesn't happen, then it's really difficult to be long term extremely bullish on Ripple, on XRP. But locally, there is something, I would say. At the moment, we're now hovering above the weekly. We have here like this channel going on, more or less. And that would give us something. I'm debating what I should do, like given the time, because I can do so many things, but I prefer to now focus a little bit more locally on what's happening here. Yeah, so we have. To be really honest, I'm not really I'm not really liking this chart. It does look very technical lately, especially the more recent price action. So, but at the moment, let me see the volume. So we do have declining volume, so that kind of indicates that we might actually get a bounce fairly soon. This local area, very area high of this previous range corresponds really nicely with the weekly actually, and the 6-6, which is something to be aware of. Volume is declining on this downtrend, so that is fairly interesting. So let's assume that we have like some kind of a so this order block, this daily order block, essentially provided some support, gave a really big rise over here. Let me see where that brought that up how does that look in terms of fib extensions? Not that much to go off of. Let's try something else. Negative fibs. Interesting. Yeah, so that monthly, this region is like really important for a bigger term, for a more global point of view. So my conclusion is as follows. From what I've done at the moment, you know, like there's much more things that that I can do. Elliott waves, fib times, and potentially find some harmonics, but that is, I think, way too time consuming to to cover all of that within this stream. As it stands currently, we just basically are in a downtrend. So I would say yeah, so this monthly is really important. I would say break this monthly and then you can actually get like a really big rise up. So there's so much confluence around here. Let me make that a correct pool actually, and then leaving this wick out of the equation for the time being. And then we actually have like a CC above us, and a monthly and a global level and a weekly level. And yeah, so the massive resistance here. So if I'm looking to, for example, like a shorter term trade, then I already know that this is going to be my target of the trade ultimately, you know. And then I just want to see whether we are able to reclaim that, right? And that is when I would potentially be looking up for higher prices. Although I do think that if we do break out of this ultimately, I do foresee like now like a fairly long sideways range to be put in, something like, you know, where this trend is actually becoming less and less impulsive down, that we're now slowly forming like a sideways, long sideways range. And I don't think that this is gonna be over within a week or so, but longer term perspective, right? And you do want to be aware of that in some point. But timing is really important. Like identifying the end of a downtrend is one thing, but actually timing your entry is even more important, because I could now enter along into here. Of course, right now would be probably in a good position still, but for all I know, this can just range on for like a year or longer even. So that is just me sitting there in a trade with no capital available to put into, you know, more active assets. And that is why timing is really important in my opinion. So globally, I would say like yeah, definitely global point of control needs to be flipped to even think of trading it up to higher prices. So with that in mind, I would say we actually have something like this downward sloping channel. Yeah, I guess you can do that. So we're currently, okay, so here I go. We're currently going sideways. We had a rise up. We are now having like a downward sloping channel, which is actually really well respected. So either you can short here at the top, take profit middle, and then ultimately look for lower lows, which do make sense because we are in a global downtrend. Locally, we are more or less of in an uptrend, where this is literally the invalidation or this trend line, so to speak. So it is a little bit interesting, but at the moment we have pretty much held the weekly, so to speak, at this moment in time, with a near exact reaction off of the point of control of this previous range, right? So that is held up, and now we are actually in the process of reclaiming the weekly. So what do I want to see? I would say if the trend turns around now, then I will simply want to see an official reclaim of this weekly. So I would say like high, higher low, higher high, and then, you know, maybe here's some consolidation again, and that could provide you a nice entry with stop loss below the low. Trading it up simply to this monthly, and then ultimately probably trading it up to the CC and maybe leaving a little bit run to see if it can actually test the global point of control. But more conservatively, I would say really let me clean up the chart a little bit. This, and this. Yeah, let's also remove just this, and let's also remove this, and let's just simply look at that. So I would say if we now do change market structure, then I would simply look at a more sideways range potentially to form initially, and that is the way how I would like to trade. Ultimately looking up for the weekly, front running it probably slightly, take profit also before the monthly, take profit here, and then just see what happens. So that would be my current play. Given the time that I have right now, I can do like a ton of more analysis. But if you have to hold a gun at my head and say like identify a trade right now, then this is what I would be looking for. Yeah, that is my final conclusion about XRP for the time being. I hope you guys got some insight in what you can do with Pitchforks and how I basically start looking at a new asset. And also, especially when it is a completely new asset. Of course, I've charted other coins, and that I do that much faster, but I already know the characteristics of these coins, and I already know how they're reacting, and I already know kind of like when do these coins kind of range, when do they become impulsive, and where do they react on. But as you can see on XRP, I've literally never really looked at it like this. So that requires me to do first some initial research and like technical research, right? And then like how does this chart work? You know, I'm trying to familiarize myself with the characteristics of this particular asset, and based off of what I can see, then that is where I'm starting to work my way to expand upon, and that takes time, and that is not really doable within how long have I been working on this right now? 20 minutes maybe. At the moment, this is the best I can come up with, simply because I am not familiar with the coin. Nevertheless, I hope this does give you some insight in how I do approach new assets and how do I approach starting out this technical analysis. I think it's very valuable. Let's move on to some questions. Oh, I'm seeing that. Right. I'm seeing that you guys have trouble seeing the Pitchfork lines. Yeah, let me expand on that. So you can change the colors. Apologies, I didn't notice at all. So that, yeah, now I've changed them to white. Sorry about that. Right. So we have a question from Nelson. When using the Pitchfork on high-term timeframe charting, where would you look to take your trade from? Would you still take your trade from that timeframe you are charting? Right. I think I know what you mean. So, good question. Where is my Pitchfork? So in this example, so this is the example that I just had, or did I delete it right now? I hope not. Yeah, so this one, where you actually have identified the CC, right? From high to low. Whoops, sorry about that. where you do have like this confluence. So what I would typically do is then typically have an alarm set, first of all, right? And then I would rely on other technical analysis tools, such as mainly like order flow. With altcoins, it's a little bit more difficult to do that. So what you could do is, for example, use the CCW setup, which looks like this. And then, you know, manage your risk accordingly and have a potential laddered entry. This would have given you 2 fills and a very clear invalidation as well. And then as price actually started to react, what you then can do is on a lower term time frame, narrow down, of course, you know, narrow down your stop loss. Let's say your average entry is here, and initially, according to this strategy, it would give you this, but it doesn't give you the best risk to reward ratio. So for that reason, I would say like probably ladder in a little bit more. I'm aware that this is a little bit of an advanced strategy, but yeah, this is how I would do it. Like get some orders filled, and then simply wait for what price is going to do, and based off of that, adjust my stop loss accordingly. That give me my risk to reward ratio. Probably 2 orders then are not being filled, and then as price actually moves into my direction, that is when I'm adding on to my position. So it's a mixture of laddering in and compounding on the way. So that is how I would trade it. And yeah, I agree. I would never trade this on a daily time frame. I would probably go to like in terms of like an altcoin, most likely the 1 hour, or probably not going any lower than the 15-minute time frame. And here you do have your clue in a way, where you are actually changing like your local market structure, right? So you're having here like your low, high, low, high, higher low, higher high. Then you range on for a little bit, and then most likely I would be looking at this as some sort of a range or a channel, from what I can see here. Something along the lines of this. And then losing that channel on an increase in volume, that would give me my entry, right? This is then confirmation of basically losing the last low. You even back test it, so there you even have like a second chance, and this is where you actually get your uptick in volume, and that is where you get your drop. That is how I would approach this. So to summarize that, identify potential entries on a high term time frame, and then narrow down to like a lower term time frame to get my exact entry. So let's see if there's any more questions. Oh wow, there's a lot answered already. All right. Looks like there's not that much. Thanks, Dan. Most of them have already been answered. If I miss any question, then let me know in the chat. I'll be around. I hope this was insightful. I hope this was helpful. And yeah, looking forward to see some pitchforks in the chat now. With that, I would wish you a very good evening or morning, depending on where you are. And happy trading, guys, and see you around in the chat then. Right, cheers, bye bye.